Let's take a quick look at markets here, almost a half hour into the trading session, and we've got all three major averages not seeing any recovery, right? Like sometimes you have this initial sell-off and then a little bit of a coming up from those levels. That ain't happening today. We're taking a leg even lower. In the backdrop here, we have a big inventory cycle that's unfolding in the economy with major retailers like Target and Walmart warning they have far too much inventory last month. And new data from Evercore ISI shows U.S. business inventories are now above pre-pandemic trends. Bloated inventories. Where we find Sozzi's.
Yeah, I was looking for some positive things for you guys. I found absolutely nothing, so I'll stay on the negativity here. Let's look at the inventories. This is from our friend of the show, Julian Emanuel, over at Evercore ISI, looking at inventory levels from a couple different perspectives. First chart on the screen, looking at U.S. inventory levels, a simple chart, but the takeaway there is, Julian notes, U.S. business inventories are above pre-pandemic trend. So red flag. Next chart here. He's also drilling down into Russell 1000 consumer companies and their inventory levels. And Julian notes that inventories are $80 billion more than 2019. So if you wrap all of this up, you can't say it's really any surprise. We heard Target about a week and a half ago, 2 weeks ago, note their inventories are now essentially out of control, and they're going to be marking goods down aggressively. You see other names on that screen with inventory far surpassing sales growth, which is a major red flag for retailers, but of course, any other company. And now the problem is all these companies are going to be working these inventories down. And what do you have to do to work inventories down? Essentially give it away, especially if you're at a retailer. And as you give this inventory away, it's going to impact your profits. And again, you still get the sense that analysts on Wall Street don't understand this is about to happen because estimates have barely moved for this quarter. Estimates should be coming down. So here's my take. Bottom line is this is going to be a major problem for companies. And there I am at the board table, crunching my numbers on inventory levels and getting very concerned about all of it.
There's a silver lining, though.
Yeah, things will get better by what, 2024?
No, not for the companies.
We get deals.
For us.
Are we going to go out and buy those deals?
Well, that's another
I mean,
question.
the economy. Look, consumer sentiment has been falling off the map. It's great to offer 70% off underwear and various socks and home furnishings goods, but are you going to go out and buy it if you're concerned about your job?
You always need underwear.
If it's in the Lululemon, we made
I mean, if you have 25 pairs, I mean, you really don't need it. I'm just saying. Just keeping it real for our viewers.
The solid rotation is 26.
We're average people.